Alphabet shares a little changed. NASDAQ just flipped red, so we've lost all the index gains now this morning as the dollar continues to firm. And bonds managed to sell off despite consumer confidence coming in light there. So interesting that treasuries are at the lows of the morning, yields at the high. Let's check in with Alan Nuttman, Chief Market Strategist at BullseyeOption.com. Guy also makes a mean chicken wing. As I sampled last week. I don't know if we can cross promote here your other brands, Alan, but those are pretty tasty. I'll give you credit.
It's a chicken rib, my friend. Rib. It's chicken that tastes like ribs. So it's the anti-wig. So this is a pure protein play. We can get into that, but I'm really here.
What's the pure market protein play right now, Alan? Stocks are getting hit.
Well, let's look at the big picture in the year that we have had, my friend. It's been an amazing year. All that's been thrown at the market, and it's been resilient. Mr. Powell has played this perfectly. We've had this soft landing. Yeah, someone's gonna say, well, inflation's at 2.8% instead of 2%. Okay, I'm okay with where we are. The question is where we're gonna be and how the market's gonna handle, the opportunities that we're gonna see. 2025 is gonna be an amazing chance for markets to move and make some money. So, it's gonna be a great time to trade. And right now, I want to talk about peace and joy, and that's what my trade is today.
Oh, that's very sweet, Alan. A Christmas message.
A Christmas message, absolutely. Peace is what I strive for. And right now, with the markets having back-to-back years of 25% in the S&P, it makes sense to look at a possible hedge for these positions, a mental hedge and a financial hedge. We've come a long ways, and we saw last week, we saw a little bit of unwinding. And net, we were only down on 2% on the week. And after that fun that we had on one day. But at some point, you're going to see these unwindings. And the question is, personally, how do you want to handle it?
Okay. All right. Well, tell me.
So what I'm looking at today is I'm looking at just buying some put options for June.
Okay.
It's ridiculously simple. That's one of the reasons these markets are here. Obviously, the main reason is to hedge, for be able to shift price risk. And you can simply buy some put options, the S&P, the SPX, or there's a mini contract. It's called the XSP,
right. That's what we're looking at,
which is 1/10 the size. So I'm looking at a June 535 put. It's 10% below. That option costs about $1,000. And for every $50,000 or $60,000 you have in your portfolio, you buy a put option. That's it. You've got insurance on your house, your car, your life. If you want to sleep well between now and June, this is a very, very, very simple strategy. And if the market sells off any more than 10%, you're protected. And if it doesn't, you're in good shape.
Alan, I think a mistake has been made here. I'm hearing you saying you're buying puts on the United States stock market. Is that right?
I am buying peace of mind. That's what I'm buying. I'm obviously going to be bullish, and there's obviously going to be
usually you're buying joy, upside,
right. I'm buying
jubilation.
Right, and just in case, I'm just.
All right, hey, I love it.
So you've got to at some point. We've had back-to-back amazing years. Who knows what's going to happen? Anything can happen in the market. Obviously, I'm very bullish. Bullseye option.
But you're buying puts here.
I'm buying.
You can't do it both ways.
I have insurance on my house in case there's a fire started. It's not. I'm not going to be. I'm not going to look to use this. And if it expires, great. Then I'm in green. I'm in great shape. That's the mentality behind it. And for every $500,000 or $600,000 you have, you could buy an SPX put. You can determine whether you want it 5% away, 10% away, 20% away. Or if you want, a smaller hedge, a smaller amount, there are these XSP options, these put options that give you that protection. So, we sometimes forget about how easy it is to protect your positions. And last week was a little bit of a reminder that, sometimes people get a little excited when we see some pullbacks. So if you want to eliminate that emotion in your mentality, this is a way to do it.
Okay, so your insurance on the house and the idea that you're happy if it expires worthless means you own stock and you've got long positions. This is intended for someone who's got long positions already. And you've been trading a lot of stock specifics to the long side. individual
Exactly.
equities. So, but still notable from a
I
macro
mean, if you've
trade.
got your 401k, your actual
Sure.
stock portfolio, not your actually trading account,
Yeah.
then you just use this as a financial hedge as a protection. It's just
Yeah.
insurance. That's all it is, and treat it like that. You're
Okay.
going to continue to trade and take advantage of whatever opportunity you see on the upside or the downside. But this is an overall market macro hedge. And a 10% pull back. We had one in August. It's been a while since we have had a bigger pullback than that. But if you look at it, it's about reversion to mean. The market hasn't been down to the 200-day moving average. In more than a year in the S&P. So at some point, something can happen. It's not my job to predict what it's going to be, but I'm prepared in case it does.
Okay, understood. Peace in peace.
Peace and joy. It will be very joyful if there's if there's not a market sell-off, you should be happy, and if there's a market sell-off, you should be happy as well.
Okay, so willing to spend a little bit to cover yourself in
it's
an
about
overall long
1.6%.
situation.
It works to be about 1.6% of your portfolio based upon just the simple math of the mini. This XSP controls $50,000 to $60,000 worth of S&P, or the big one, the real SPX. That you're controlling $500,000, almost $600,000 worth of stock.
Got it. Hey, even Santa buys insurance on the sleigh. Not pet insurance though. Too expensive.
1.6. That can be done in half an hour.
What's that?
So
Oh, right. Yeah. Okay. Happy holidays, Mr. Nuckman.
You too, my friend. Thank you.
See you. Thanks. Makes a good chicken rib. Chief Market Strategist at bullseyeoption.com. All right, Andy is a chef too. Coming up, let's talk some more small caps. We're going to take a look at some funds positioned for possible rotation if the little ones bounce back, though.